Okay, welcome. Hi, yes, how to buy your first home without any hassle, even if you've never done it before. So, that is what we're going to be talking about. Hopefully, you are in the right place, and welcome. So, here we go. Agenda. First, who is Jake Skinner anyway? That's me. That's what we'll touch on that first. I'll give you a little bit of background on me. What is Envoy Mortgage? That's my company. We'll go over that. How the home buying process works, how you get the money, and what you can do to get started, as well as a special offer for attending the webinar. So here we go. I am a licensed loan officer. I am licensed in Florida and New Hampshire, and hopefully Massachusetts will be coming soon. And I just love to talk about real estate. I'm a real estate investor for myself, and I've been a broker. I've been a closer, and now I am a mortgage guy. So, I've run the whole gamut. Where I'm coming from is, the reason why I like to help people, the reason why I'm here doing this webinar for you is, I really have always been interested in real estate. I came from humble beginnings. My home had been foreclosed on when I was a child, and, it really stressed for me, the importance of having a home, and what that means to people, and so that's sort of like deeply ingrained in who I am. State school, worked hard, built myself up from nothing. The classic American story. From literally my father's basement, my wife and I, where we started out, $150,000 in student loans. But we were still able to buy a house and build a real estate portfolio from that. So if I can do it, you can do it as well. And I am here to help you to make sure we can get that for you. What is next? Who is Envoy, and what can they do for you? So Envoy is a direct mortgage lender. We also have the ability to broker, one of the largest in the country. And so we are the ones who get you the money. I mean, that's the basic process of how it works. So you talk to a mortgage guy, we look at your financials and your credit, you get pre-approved, and you find your house, and then you come back, you complete your application, and we fund the loan. We fund your purchase, basically, minus the down payment that you do bring. So experience the Envoy difference and partner with a champion. So that's Envoy, but really a great company. Google's out there. You can Google us, and you'll see a lot of really great reviews. We have every single program that you could possibly want. I know if you're new to the home buying process, a lot of these things may not mean much to you, but anything that you're looking for, anything that you need, we have it. We have it. So feel free to reach out, and part of my job is to figure out what works best for you. So they have that. These are the Accelerate program, e-closings. We have a whole new suite of programs and technology for 2020. You can literally apply for the mortgage online in 15 minutes from your cell phone. So that's sort of what the Accelerate program is, and we have just a whole team across the country, in all 50 states, working for you, the latest technology. I'm here, they're there, and we really work hard for you. So here we go into the presentation about buying your first home. And if you're wondering where to start, you are in the right place. You start here with the money, because a lot of folks, they go online. Obviously, Realtor.com is there, Zillow, Redfin, all those services, and they find the house that they want. Then they contact a realtor. They might go and look at the house and everything, and then all of a sudden, you want to make an offer, and you don't have a pre-approval letter. And in some markets, you can't even submit an offer if you don't have a pre-approval letter, because it's so competitive, they won't take you seriously. And in other markets, that may not be the case. It depends on where you live. Real estate is local, but the other problem is you need to know what what you're qualified for, so that you're shopping in the right price range. I like to tell people that you don't want to go test driving Porsches and Ferraris when actually all you can afford is a Honda Accord. I have a Honda Accord, or I used to have a Honda Accord. Nothing wrong with that. It's just that you don't want to be let down. You want to start out with the right mindset, so that you know exactly what you're getting into. Okay. And so how much you can afford, it depends on obviously what you're making for income, and that's going to be a little bit more of a complicated calculation than you might realize, because we're going to get 2 years of W-2s, 2 years tax returns, your 2 most recent pay stubs, and then the other thing that factors into it is your FICO score and your other debts that you might have. So all of that factors into the way that they calculate what your income is for qualification, and it's going to be a little bit different than just the number that you make hourly. So you definitely want to talk to someone to find out the way that they look at that. And the same thing goes for your debts. There are certain debts that we might not be able to, we might not have to count. We might not have to count those debts, such as medical collections. So definitely you want to talk to someone to find out about that. Obviously credit. Credit right now is a little bit tight. But typically we can go down to 580 credit score. A lot of products will be 620. So you're really shooting for that 620 credit score in order to be qualified for the most products. Obviously, the higher your credit score, the better. But if you can get to 580, then definitely give me a call, talk to someone, because typically we can get you into an FHA program on that 3.5% down. But your credit score is really important, and you may have Credit Karma available to you, something like that, to give you an estimation of what your score is. But it's going to be a little bit different than the actual score. It's only an estimate. I've seen it be 50 points or more off. So don't let that discourage you from applying. If you think that you're at 575 and you can't make it, it could actually be higher. So just so you know that. So the first thing that you would need is a down payment. That's your skin in the game, so to speak. So typically for a first-time home buyer, you might be looking at a FHA loan of 3.5% down. We can actually also do a conventional loan of 3% down if you have a little bit higher credit score. Like I said, the higher your credit score, the more you'll be qualified for. And also your debt-to-income ratios will be factored into that. But the most important thing I want to convey here is that a lot of people think you need 20% down to buy a house, or 10% down. It's just not true. Obviously, the more you put down, the lower your payment will be, and sometimes the better interest rate you can get. But it's just not required. So and also there are other loans, like a VA loan if you're a veteran, a USDA rural loan, that actually you can get with zero down. So, talk to a loan officer and see what you can do before you make any decisions on that. All right, so here we go. Now this is the meat and potatoes of the actual process. So let me just go over this here for you. This is sort of what I promised on this webinar. The details of how you buy a house. So as we've said, first things first, you want to get that money situation squared away. Talk to a loan officer and get your pre-approval, so that way we know exactly what we're looking for. We're not looking at mansions online, and then all we can get is something else. So you want to make sure that you're in the right price range, and you also want to make sure that you have that firepower when you find that dream home that you want to get. You're going to want to get it right away. And if you're scrambling around trying to get a pre-approval letter, it could be tough. It could be tough depending on, what you have prepared already for your financial information. So then, once you have your pre-approval in place, then you can establish your real estate agent plan. Now, you don't need to have a realtor. Realtor's obviously going to help you out. They're going to get you into the houses that you need to see, typically. And for the most part, it doesn't cost you anything. The seller pays, hires a real estate agent to list their house, and typically they pay them 5 to 6% commission. That real estate agent then splits that commission with the buyer's agent. So the seller essentially pays for you to have your representation. And if you are going to use a realtor, it's important to get your own realtor, because in some states, the listing realtor who's making that 5 or 6% commission can go ahead and represent both sides of both sides of the transaction. And I think you can see where a conflict of interest would arise on that. So if the seller is going to be paying that money anyway, you might as well get someone to represent yourself. However, if you're not going to get a real estate agent, you don't have to have one. That's one of the benefits of working with me. I am formerly a real estate broker, inactive right now as I'm a mortgage guy presently, so I'm not going to play two sides of the transaction. But given my experience as an attorney, as a broker, as a closer, I can guide you through the process. I can help you out. I can give you some advice, and sort of point you in the right directions. So you got your pre-approval. You got your real estate agent plan. Either you have one or you decided to represent yourself. Next thing you know, now you can look for properties. So everyone gets this backwards. Don't feel bad if you've been shopping for properties already. This is typically what people do. But you want to get the right order. So now you can start looking at properties that are in your price range, and start going to open houses and requesting showings from the realtors. Now, once you find the one that you want, then you make an offer on the property. And if the offer is accepted, then the sellers will sign it. So you work with your realtor, or you put together your offer, you send it on over, typically using the standard real estate approved purchase and sale agreement, also known as a P&S. The seller will either agree or counteroffer. If they agree, they sign it, send it back to you. And so now you're under contract. And the next step then is to go ahead and submit the mortgage loan application. Basically, you make your pre-approval a live application. We should have, if you've been pre-approved with us, then we should have basically all the information that we need. Maybe we're missing a couple of little pieces that might have been hard for you to locate, but all we need to do at this point is make the loan live, give you some federally mandated disclosures, and then make sure we have everything in order, and send it to underwriting. Underwriting is the back office bean counters, essentially, that go through your file and make sure that all the I's are dotted, T's are crossed, and we're going to have everything that we need for a complete loan file. They typically come back with some extra questions or things that they might need. We need an updated bank statement or an updated pay stub. If you've had your pre-approval for some time, those documents tend to expire. And so then we work with them to get the loan finalized. Now, while this is happening, you should be talking to a insurance agent to make sure that you get a binder, quote unquote, which is just a piece of paper that says, okay, we're going to insure this property. This is what it's going to cost, and you can either pay them up front for that, but typically we suggest that you go ahead and have them put that on the CD, which is the closing disclosure, which means you'll pay at closing from your down payment or the loan proceeds from us. So, and I can give you a recommendation on an insurance agent, or your real estate agent can do that too. I skipped one. Here we go. Okay, back to this here. Schedule and attend inspection. So, while this loan process is happening, and typically your purchase and sale agreement will have 30 to 60 days, 45 days is sort of typical, to make sure that you have time to do all the things that you need to do. One of the most important is to schedule and attend an inspection. So in order to hire a qualified building inspector, you have to schedule that out. Typically it takes about a week. And then they go through the property, head to toe. You should be able to accompany them. And one of the main benefits of that is, if you've never owned a home before, a good home inspector will give you tips and tricks and information on how the boiler works and the furnace, and what to look for, how to do proper maintenance, and things like that. So not only does it help you in the negotiation process and make sure that you get what you hope that you got, to protect you in case There are some defects in the house that you didn't notice at the open house or when you went to see it. But it's a great little, mini education in running your house. So, so now we're going to finalize, update the documents. I mentioned that before. Underwriting, we'll be looking for, the last things that you might need. We also want to make sure that we got the appraisal in. And so during this whole process, typically, right after you do your inspection and finish that negotiation, because if the inspection comes back with something bad or it wasn't exactly the way you wanted it, you then go back to the seller and ask them to fix it or to give you a credit on your closing statement or pay for it or discount the price. And if you can't work it out, then you cancel the contract, you get your deposit money back, and everyone's happy. And then you want to make sure you get an appraisal. So the appraisal is a little bit different than the inspection. The appraiser just goes, which is on behalf of the bank, on behalf of the lender. You pay for the appraisal in order to keep it separate. That's all government rules and regulations. Certainly after the last housing crisis, when appraisers were sort of, just willy-nilly, and whatever the contract price was, they would kind of, approve that, and things got out of hand. So appraisers are independent. They make sure that, the house that you're buying is worth what you're buying it for. And so that's one of the other final documents that we'll need, an appraisal that matches up to the price. Otherwise, you'll have to renegotiate again. And so once we have all that, we have a final loan application. You get what's known as clear to close. So once you're clear to close, then you'd be scheduling with the title company as we get closer to that. You'll e-sign some more disclosures. Typically now we do an e-sign hybrid closing, so you'll also e-sign a lot of your closing documents. And then you'll go to the title company where you complete the other closing documents, the seller completes their closing documents, and you get the keys to the house. Also, you're going to bring a certified or bank check for your down payment, that 3% or 3.5% or however much you want to put down, and you give that to the title company. Title company puts that in an escrow account. Envoy Mortgage or your mortgage lender wires over the rest of the funds, so hundreds of thousands of dollars typically on your behalf, to the title company, and then the title company pays off the seller's existing mortgage, if there is one, and then gives the proceeds to the seller. So, that's essentially escrow. And the title company will record your deed in the registry of deeds and typically give you a copy when you leave the office, so you can go to your house, your brand new house, with the keys and move in and feel confident that you have the deed in hand, and that you own the property. So, okay, some other things to know. Right here. So interest rate versus APR. The rate is the cost of borrowing the principal amount of the loan. And this is very confusing to people. It's supposed to help clarify things, but like a lot of government regulations, the best intentions don't always work out. So the interest rate is the interest rate that you're going to pay on your loan. The APR is essentially just an indication of the other costs that you had to pay in order to get that interest rate. And so the main cost that people tend to pay to get that interest rate is called points, discount points. So this is something too that I think really needs some change in the industry, some clarity, because lenders will often advertise a crazy low rate, like, oh my God, you're going to refinance, or you're gonna if you're a first-time home buyer, you're going to get 2.5% or 3%, 2.99, and then in fine print or on the back of the page it'll say, with 3 points or 2.5 points. And a lot of times people don't understand that, and then they go to closing and they just sign the documents. They don't pay attention. They don't understand. But that's a percent of the loan amount. So that's $1,000 for every $100,000 that you're borrowing. Now, if you're definitely going to stay in your house for 30 years, it can be worth it to pay that money up front in order to get that lower rate that you're going to enjoy all that time. But typically, statistics, on average, people move, people refinance, and it's generally not a good idea to pay those points. for the amount that it's going to lower your interest, for the amount that you're going to have that loan, it's going to take a long time for you to recover that. It's typically better to just keep that money in your pocket, save that expense. But people don't realize it's happening. They're just looking at the rate. So you really need to just be careful with that. The other thing is, if you take a slightly higher rate, sometimes you can get a lender credit. That's not always available. Typically in the market right now, you don't see that too much. But say the prevailing interest rate is 4.75. If you're a little light on your down payment funds, sometimes you can go ahead and take a 4.99 or 5%, and then the lender will apply a little credit to your closing costs of that quarter point. So other costs. So there are a lot of other costs. I mentioned the appraisal. That's typically around $475, somewhere in that neighborhood, to get the appraisal done. That's something that you have to pay for again to keep everything on the up and up and separate. And, excuse me. Credit report, title work, recording fees, taxes. So you're going to get disclosures. They're going to show you a fairly large number that is your down payment and some of these other costs. And one thing that people tend to also not understand is that a lot of that money, it stays your money because it's costs and fees that you have to pay anyway. You have to pay to the government to record the deed and mortgage. You have to pay to the government for a transfer tax, also known as tax stamps. And then also your escrow account. So your escrow will be your taxes and insurance, the future taxes that you have to pay, and your insurance on the property. So part of that will be a few $1,000s that actually you're not spending right then. You're keeping in your escrow account for your use for the future, so that the lender knows that stuff is going to get paid, and you know that it's going to get paid, so you don't end up losing your house to a tax sale or to a fire if you don't have insurance. So just so you're aware of that. One last thing that you need to be aware of too is that you can negotiate, or your realtor, if you have one, can negotiate the seller to pay some closing costs. So typically that's, you can say 1% back in closing costs. Some programs do a maximum of 3%. The maximum is, I think, 6% on other programs. So, the idea is that if you have a $100,000 house, the seller could give you a 3% credit. So on that closing disclosure with those fees and closing costs, you would see a credit from the seller of $3,000. And so then rather than actually them getting $100,000, they actually get $97,000 because they gave you that 3 to apply to your closing costs. P&S, purchase and sale agreement. I mentioned that earlier, I believe. LE, the loan estimate. Back in the day, it was called a good faith estimate. So once you make your pre-approval live, so we've given you the pre-approval, we've said you're approved for this amount of money, you found your house, and you come back to me and say, hey Jake, I'm ready to go, I got the house, let's make my application, let's get moving on this. So then we're going to generate this loan estimate. Again, it's required. Typically you e-sign that, so it comes in your email and you click through it, and it gives you an estimate of all those fees and costs that you're going to see at the end of the transaction. And one thing to be aware of is that we always, those are sort of overestimated, like kind of giving you a worst case scenario on costs and fees. That way you're fully informed of what you're getting into. But you also don't want to get sticker shock and just be blown away by that, because it's almost always lower, because there are, again, government rules and regulations that will penalize us if we give you a low estimate at the beginning, obviously, and then get you into this transaction, and then when you get to the end, it costs a lot more. And you don't want to be in that position. So we overestimated to start out with. The insurance binder I mentioned before, which is just a piece of paper that says, this is what it's going to cost to insure the property, and we will insure it for that much. The CD, closing disclosure, formerly known as the HUD-1, again, just lists out all these costs and fees of the transaction. And it can be a little bit confusing, but certainly I can explain it to you as a former closer and real estate broker, and your real estate agent can explain it, as well as the title company too. Would be happy to explain that to you. So here we come to the end of the presentation. So that's basically it. We really make it easy. first step is call a mortgage guy, call me, email me, go online, fill out the application, get pre-approved, and then from there you're looking at houses, and your real estate agent will write the offer, and you come back to me, and it's really, really, really very easy. In 45 days from today, you can be walking into your own house. Trust me. So don't be scared. Don't be worried. Now, here's my offer. You can see it on the screen. We will cover the cost of your appraisal. So, like I said, you have to pay for it because that's the rule. And so, when you start that application, when you found your house and we make it live and you do the disclosures, there'll be a link for you to go to a website where you can put your credit card in, pay for the appraisal. Now, when you get to the end of the process and you're actually buying your house, you're going to see a credit back from us, from Envoy Mortgage, on those, on the closing disclosure, the costs and fees of the $475 back to you. So, for watching this webinar, for coming here and attending this, that's our gift to you. So you'll see the link either in the chat, in the comments, or I'll put the link up for you to click to go ahead and complete that application in order to accept that offer. Or you can email me, jake.skinner@envoymortgage.com, or call me 239-310-5626, and I'll just mention this offer, and I'll make sure that you get set aside for that. Your second option is to go ahead and submit a informal informational survey. Give me some basic information on what your situation is, and we can get in touch and I can discuss possible options and thoughts for you. One thing I do want to caution you on that, though, is, as I mentioned, the way that the underwriters interpret your income is slightly different than just, okay, well, this is my pay stub. If all you have is pay stubs and you've been making the same amount, same job, then this little informal discussion is going to give you a very accurate picture of where you're going to be, what you're going to be qualified for. But if you have either a complicated debt situation with different things going on there, or maybe self-employment income or other investment income, things like that, rental properties. If you're a first-time home buyer, you probably don't have that, but there are a lot of different ways that your income can appear one way to you and appear a different way to an underwriter, unfortunately. So that's where you really want to just go ahead and apply so we can evaluate it officially for you. And then the final option is you could book a call, and we could just talk about real estate in general, any ideas that you have. I'm a resource, whatever you want to talk about, investing, rentals, flips, anything at all. Basic first-time home buyer questions that we didn't cover in this webinar. I'm happy to discuss that. My experience, who I am, what I'm about. Hopefully you got a good picture of that in this webinar, but if not, you can book a call for that. So, I don't know if you can see the bit.ly links there as well, and write those down for these, but they should be in the chat bar or on the side of your screen or on the bottom of your screen somewhere, or perhaps in the comments section for you to click, for you to have these options. All right, and then I believe there's some contact information here at the end. Yep, that's me, Jake Skinner, telephone number, email address. Feel free to reach out to me. Happy to help. Like I said, no obligation. No cost, obviously. I'm an employee of Envoy Mortgage. I get paid by Envoy. So that's how that works, if you were curious. But yeah, so there you have it. Any questions, go ahead and email me. I'd be happy to take care of you, or shoot me a text or give me a call. All right?